Alan, how are you? I'm now passing you you will control our television set like the Outer Limits. I'm making you the presenter. Looking forward to meeting you, buddy. So your screen is coming up now. Let's see. Check your volume. Your volume. You're calling in.
Cool. Good morning, Dale. How are you?
Alan, great to meet you.
Nice meeting you. You can hear me all right?
I can hear you all right. I can hear you fine, loud and clear on this shortened week. Really appreciate you taking time to talk to us and be here in F.A.C.E. And I usually like to start with people I haven't interviewed before with, taking them back to the beginning part of their journey in trading and how they ended up in the industry, and who were their influences to, help them get from point A to point B. So what were you doing before trading, Alan?
So my career started in IT, and it was even a circuitous route getting to doing PCs and computers and what have you, because I went to college for English. But what I learned in college was that if you can read something and if you can practice it, you can make a skill out of it. And that's how I ended up in IT. Also tried to use that approach as I started with trading. So after many years in doing computing and solution architecture, and by the way, can you see my screen?
I just took your screen off because it looked just like a blank screen, but I'm going to give it back to you. Okay, I didn't know if you had anything to show, so I just
I was going to try and share something today. But,
okay, I'm making you the presenter again, so you could share your screen now, Alan.
Let me see. I have a couple monitors. I don't know if that's screwing me up or not.
Okay, so I see now we see the charts of the crude
monitor.
the crude dive off Niagara Falls in a barrel.
Yeah, sure is. So anyway, from IT to trading, I started getting interested in trading in 2002. And what I try to do is use the same approach to trading that I did in building a career in IT, which is I said, all I really need to do is read and learn from all the smartest people, try to leverage and copy what they do, and apply to the markets.
Who were they?
So I started out looking at Timothy Moore's, looking at pitchforks. Well, I guess where I started out was just the traditional kind of indicators I think everyone starts with on technical analysis, right? Which is, your MACD, your RSI, moving averages. Started reading from Van Tharp and reading about the importance of position sizing. Actually, I probably started on that part first. That's probably the most important thing. I remember
that was self-discovery.
Yes, I never had the luxury of having a mentor who came from a trading profession. So I let the market be my trainer, which it's an expensive education potentially, but it's the best one, I think.
Well, you always hope that it's more for like a state university instead of Ivy League.
Right.
Your tuition, right? Yeah.
Correct. I'd say I'm probably somewhere in the middle. I remember listening to one of your earlier interviews. You had asked someone if they had ever blown up an account before. So in the spirit of full disclosure, when I started in 2002, I blew up an account in 2004. As I started to trade, like I said, that was not unfortunately the first thing that I learned about. And I got very interested in options. And I got attracted to them because of the leverage. But I blew up that account because I didn't appreciate the value of position sizing. So I learned that the hard way. That was a good education for me. But what I really learned, which is really what I want to share with you, which is the biggest thing I learned, not just from blowing up that account, but also between 2002, I'd say, and 2004, 2005, and the first 3 years or so of trading, is that my approach to learning these indicators and trying to build systems the way that I'd done in IT, that was not going to be successful. They are just a manifestation. They are nothing more than the lines and the symbols that your brain can use to try to help you understand really what's on people's minds in the market. In other words, my real goal and what improved my trading enormously is when I stopped looking at the specifics of the indicators and started looking at them more in the context of what's the message of the market. Price. And what is the market really trying to tell me? In other words, if we're seeing a reversal on something, why are we seeing it? What does it really mean? What are people thinking about? And when you start looking at correlating the different markets together, even though really my focus in trading is purely Forex, but trading, looking at all the different markets together, then I was able to start really improving my trading. And The good part is it's made me a more successful trader. At the same time, if I can't weave a story, and I'm just listening to the webinar from you guys this morning, you're weaving a lot of stories, right? You're looking for all the different relationships between different markets. So if you can't weave a story, you can't, narratives. That's a perfect word for it. If you can't do that, then you can't make a trade.
Right, because a narrative will give you a bias, right, Alan? A narrative will tell you what you should be looking for potential trading opportunities. If you don't have a narrative, it's a random walk.
Yeah. Which some folks might say you're better off throwing a dart up on the dartboard and giving that.
Yeah, let me ask you something. In your options experience, were you writing them or just outright buying them? And because, I used to have an expression that options are like relationships, 90% of them expire worthless. So, and I bought, and I bought many of those, I've done it. I used to be an outright option buyer. Was that what took you down was time erosion and dealing with a market that might not have could have been going your way, but took too long to get there?
It's a great question. So my dad has been an active trader his whole life. So I grew up with some exposure to finance and trading my whole life, and he's been a covered call writer for forever. Okay. But I decided I was much smarter than that, and so what I wanted to do was more directional trading. And so I would try straddles. I would try buying just outright puts or outright calls. And yes, the time expiration value, but also, I had an options calculator, and again, I was trying to mimic what I'd seen other people do. But the truth is that there's so much mathematics going on there that after I blew up that account, I said, you know what, this is probably not for me.
Yeah, that's a good signal.
Yeah.
So
the thing I love about Forex.
Yeah, you went to Forex.
Sorry, go ahead.
Options. No, that's great. No, that's an excellent point. So, I've interviewed Schwager, and he says, find a trading style that suits your personality. You also have to find instruments that suit your trading personality.
Right.
So that's what you
my
did.
Trading personality, it turns out my trading personality is a lot longer term than I thought it was. Because when I started out, I was trying to do day trading and even swing trading, but I learned pretty quickly that longer term trading, more position trading, was actually more my style.
Okay.
And so most of my work happens on a weekly chart. I look at the dailies and the monthlies. It's important to look up a time frame and down a time frame for clues and signals. But I find that longer term trading and position trading suits me better. And what I do with Sea Lion Capital, I actually started out as a registered investment advisor. So I got my Series 65, and in 07 started managing other people's money. But what I saw and what got me out of that, and I decided to get more on the education side and trading my own money only, is honestly, for the kinds of clients that I had, they were better off just, signing up with Betterment or something like that. I couldn't justify taking the percentage that I needed to make a living out of this. Versus, essentially, it's ironic that a guy in IT, I think I was pushed out of the business by a computer. So I would encourage people who need that type, unless you're pursuing very high net worth clients, which I didn't have those kinds of resources to do. I don't think it made any sense. So
well, I've done both, Alan. I seem to be more emotional in my decision making with OPM, other people's money, than my own. Were you like that?
Well, what I try to do is I try to be more mechanical. Again, being an IT guy, I'm very systems oriented. Everything I do actually in my life, I try to build systems around. But I learned, again, that the lesson I learned early on in the first few years was it is more emotional. That money decisions and finance decisions is more about opinions than emotional. If you want to have an opinion on what's going on with Britain right now with Brexit, it's very hard to have a factual opinion. Try to identify a system that's going to tell you what the answer of what's going to happen there into 2019. It's not there. You can have an emotional opinion, and they're more valuable than the scientific ones. And so the indicators, you see some indicators on my screen, and I use others. I look at pitchforks and Fibonacci and all this stuff. But that's not the way you make a trading. At least that's not the way I make a trading decision. I read those things, and then I try to take a step back and say, okay, what is all this saying? And if I can't come up with something, I don't make a trade. I'll be very honest.
We, talking to position traders are, probably a fewer percentage. Most are swing traders that I know. It takes a lot of patience to be a position trader because it's hard to sit to targets with all the the long and winding road to an objective. So do you manage your trades on a higher time frame than you enter a trade on, so you don't notice all the noise?
I always enter on the weekly, but I look at the daily and the monthly for clues.
Okay.
Yeah.
So what are you seeing here, Alan? I mean, we've had a lot of. I'm kind of interested if we can make a transition.
Sure.
You have a crude chart up here.
Sure.
You're a position trader. We have this very dramatic fall here. A lot of people are starting to say that there could be a bounce, whether it's from last week's low. I know someone looking for my 5250 or some first. Are you looking for some type of recovery in crude, or right now that's just a guess?
That's a great segue. So I don't have an opinion per se on whether we're going to get a bounce. What I would show you on this chart, and I'll take you to some Forex charts with it, is why I asked myself, so why is crude falling the way it is? And if I look back at the economic calendar, actually back in September, right about when we started to see, or in October rather, when we started to see the fall, there are 4 manufacturing reports that week. One was France, one was Germany, one was China, one was the U.S. 3 out of the 4 were misses.
Okay.
The U.S. one was pretty much spot on and was a little bit positive in another respect. And since then, oil has really been crashing. And half the crude oil, roughly, is turned into gasoline and diesel, and the other half is used for a variety of distillates. But really what drives, in my opinion, crude oil prices, I mean, there's a lot of political factors, but often what's driving crude oil prices is whether or not markets believe that manufacturing is on a good track. So if they believe there's economic growth and there's healthy manufacturing, that is very bullish and supportive of oil in general.
How about the weakness or strength of the dollar?
They are inversely related.
Okay.
Right? So when you see oil pull back, you'll see a rally in the dollar. So you're reading my mind. You're ahead of me now.
Sorry.
Not at all. So now we've seen an environment where over the last 5-6 weeks, we're seeing crude sell off like crazy. And we can see the nature of the sell off, by the way, is very corrective, right? Because it's very sharp. Usually when we see trends, they're long and they take a long time to get up to their peaks, but correctives come down, like waterfalls. And that's the nature of that fall right there.
Down, it's gravity. Down, it's faster.
Right.
Some Elliott-ians
goes up like a hot air balloon and goes down like an airplane.
Yeah, but sometimes, Alan, Elliott-ians would say that a sharp directional move is impulsive rather than corrective. So that Elliott-ians would have a different view on this, saying that it's because it happens so fast. Impulsive moves are getting from point A to point B in a hurry. Corrective moves are, sometimes they'll correct, overbought, oversold in time and not as much in price. So just wanted to point that out, that some people would say this was impulsive, not corrective.
And it very well may be. I guess what I'm saying is I think it's just too early to tell. I don't know yet. But what I do know is that the negative sentiment, the negative sentiment around the global economy and around manufacturing specifically, I think over the last several weeks, it's starting really in the beginning of October, that's really when the theory, I think, changed. I think that's where this negative sentiment came in, and I think that's what's pushing crude lower. And that also pushed the dollar higher. So the other charts I want to share with you briefly, right, and we're kind of moving to some other markets, is those countries that I just mentioned, right? Their markets have been brutally, this is Germany, right, have been brutally under attack.
It's like
all year they've been selling off.
Mm-hmm.
That's like the DAX. And we can come down here and look at China.
Yeah.
Same kind of situation. And we can also take a look at Japan.
To the upside.
It could, right? The ascending triangle. I heard your conversation about whether it's a symmetric triangle or ascending triangle. And, one of the challenges with chart patterns in general is it depends on how you like to draw the lines and where you like to draw those lines.
Yeah. Well, that's why I call some technicians technical analists. They're so anal about every little thing that, anyway.
Well, no, I think it's an important point, because I think you need to have a theory that will help you draw the line. Don't draw the line and then pull out the theory. I think that's backwards. So what I try to do is I try to come up with the theory and a premise, and then the line is there. And I'm like, oh, okay, that's confirming the premise. If I can't draw the line that confirms the theory, there's no trade.
Got you.
I can't come up with something rational that nothing makes sense anymore. In fact, just again, in the spirit of full disclosure, the Kiwi has been the hottest thing in the currency market for the last 4 or 5 weeks, right? And the Kiwi's
Yeah,
been
it's
exploding.
held up like a champ during all of this turmoil.
Right. I got to be honest with you, I missed most of those trades. That was a trade that moved so fast and did not make any rational sense to me. I knew that there was some better economic news coming from New Zealand, but the RBNZ had not been talking about raising rates. If anything, they're still playing with the idea of possibly cutting rates. So anyway, I didn't see that coming. But getting back to this. So the premise being that here we see negative sentimentality, but it's very possible that perhaps this is coming because I'm looking to trade the CAD. I'm trying to figure out how can I trade the loonie. The U.S. dollar or the U.S. economy doesn't play specifically into this theory because half of the crude that we import from Canada. But those other three countries, they import from, Saudi Arabia, Nigeria, Iraq, all those kinds of countries. So very different situation. They don't get the benefit of shale oil like we do. And you know that when price gets down to about $50 or so, where it is now, 50, 55 bucks, the shale oil producers don't make money anymore. True statement?
I believe so.
Yeah. So they need prices to go higher.
I learned from my guests. Now I know that.
Yeah. Somewhere right around between $50 and $55, the shale oil guys don't make any money anymore.
Also
production. So much energy. Yeah.
Okay.
Production.
Yeah.
So,
all right.
So, and now we have Saudi Arabia last week talking about they might cut production. They might get OPEC to try and reduce their production. So this would be
I'd rather have them. You know what, Alan? I don't like to be political, but I'm going to be. I'd rather have the Saudis cut production than cut up people.
Right.
How about that?
That's for sure. Yes, that's for sure.
Okay, so go ahead.
So what I'd like to do now is let's go and take a look at, for example, Aussie CAD. So with that premise in mind, right? And the Aussies had this huge reversal. And now we actually see that I have a support and resistance line identified at 96.5. 96.5 is a really important level for me because 96.5, if we come back to December of 2017, it stopped here.
Right.
If we come all the way back here to January of 17, it stopped here.
Beautiful.
Now, I have not gone back and looked at some of the economics of Australia and Canada going back that far, but just looking at the chart, this would be a rational, logical place for price to reverse. And if we think that perhaps the market sentiment and trader sentiment is, you know what, we've kind of beaten up on oil enough. It's been down quite a bit. Manufacturing is not as bad as all that. The economy's still pretty good. And by the way, Canada's economy is doing pretty well outside of the fact that oil is getting destroyed. Their services sector, other parts of their economy are doing quite well.
Okay.
One of the benefits, by the way, of being a position trader is you get a chance to read all these economic reports. You get to read some good stuff.
Right.
Because you're not on the screen all day trying to push the button.
Do you ever scale into a position, or it's one position, that's it, set your stops and your long-term targets? Sure. But as things change, probably your stops move around to limit risk even more, to break even when it's in your favor. And even a position trader, I think, needs to be able to take partial profits. Do you?
I do. In fact, those who get my newsletter, they'll see exactly what you're talking about. So I use kind of a 50-50 method. So when you enter a position, you can either enter in for half or you can enter in for full. And as you're looking to take profits or take your losses, you can take out half or you can take full.
Okay.
And I try to tie all that back to the theory. So I can tell you right now, for example, I've taken half a position on CAD yen. Here, I'll show you what that looks like. Well, anyway, just finishing up with Aussie CAD though.
Okay.
Aussie's had a pretty nice rally as well. The Aussie also is, I think, potential for reversal. I do think the euro the dollar, by the way, is going to get weaker. I think the Dixie has run out of steam, at least for a while. And so this would be a rational, logical place to see a reversal, and we're seeing some overbought. If we look at CAD yen, I dipped my toe in the water back here after this big push up above this 86 level. Kind of same idea. So you're right here. So 86 is an important level where prices swung through before, and it stopped over here as well. But I think oil has been beaten up enough that it's time now perhaps to start seeing some bullish activity. So yes, I took a half a position on CAD yen. Also, by the way, because while most of the world is raising their interest rates and strengthening their currency, the Japanese are not interested in doing that at all, right? They want a weaker currency. They're completely export driven, and so they need their prices to be competitive, and they're under massive competition from South Korea and China. So they need to keep their currency a bit on the weak side all the time. But right now I'm behind in this position a little bit, but
okay. So a lot of your recent positions are predicated on crude is way overdone to the downside. There's going to be, in a month or two, some type of recovery in crude, and you've made the translation to these pairs, and then when you throw the yen into it, you're talking about perhaps the decline we had in U.S. dollar yen or the strength we had in the futures isn't going to be long lasting, because U.S. dollar yen, I think, that was a pretty decisive week last week, and unless the yields shoot up, there could be some more downside. I just think it looks pretty weak technically right now. U.S. dollar yen. That's how we pair. Yeah. Well, you know it. You trade U.S. dollar yen. So you think U.S. dollar yen? This was a buying opportunity. This break we had in the yen last week. U.S. dollar yen.
I actually would probably be, again, the dollar and the while the dollar and crude are negatively correlated to each other. I'm not looking as how can I put this? I don't think those trades are obvious relative to other currencies. So I think there's a whole other dynamic going on here between dollar yen that doesn't affect crude. And again, because half of our crude comes from Canada, it doesn't come from those other countries. And we're now one of the largest oil producers in the world. That dynamic doesn't necessarily work. I mean, if you look at resistance, I'm putting this dollar yen chart up here. This is a great opportunity to short the dollar against the yen for more yen strength, because this 114 level has been a massive source of resistance for this pair for a long time.
Right. Okay. Yeah, that's great, Alan. Did you bring any other things that are on your radar to talk about?
That's probably the biggest one. I would just touch on that as a position trader as it relates to the pound, right? I mean, I can't touch this with a 10-foot pole.
Okay.
I just put this on right here. I mean, this is what the euro pound, if you're a day trader, I think this must be a paradise. You guys are probably making a lot of money with the swings back and forth, but it's so politically charged that I think it's very difficult to make a trade because there's just no trend.
And if you're in the U.S., the moves happen in Europe anyway. So,
that's true.
That big candle happened overseas by the time we got here.
The other currency that I'm watching very closely is the Swiss franc.
Yeah.
Yep. Because and I have a short position here, which I just opened. I see dollar franc going quite a bit south. I think the sell-offs, what's interesting about equities right now is there's been a lot of selling, especially on international, but there's not a lot of panic yet. I think, and I could pull up the S&P, I think if we break through the next support resistance level, if that happens, and if is the largest two-letter word in the dictionary, but if that happens, you might see some panic creep in. When I looked at the VIX on Friday last week, I think it's at 18. That's not panic, right? We'd have to see the VIX pop up to 25, 30, 40 before we could get serious about markets panicking. If you see that, I think you're going to see money run into the Swiss franc like crazy, and you'll see gold shoot up and all that good stuff. But right now, there's just not a lot of panic. But I think the dollar will be weakest against the reserve currencies like the yen and the Swiss franc.
Don't you view a weak dollar, since people complain that a strong dollar is deflationary, that a weak dollar is actually supportive for equities, especially the multinationals? We're all complaining about the dollar translation in the last round of earning reports, so a weaker dollar could actually buoy equities.
It's funny. I don't know if you can have it both ways. And what I mean by that is, oftentimes what drives up U.S. equities are foreigners investing in U.S. markets. So if we have a weaker dollar, that means that they're probably not investing in U.S. markets. They're probably sitting on their dollars. On the other hand, greater demand for the dollar, a rising dollar, can just as easily also rise markets. So I don't know if that correlation necessarily works.
Yeah, I've been trying to figure it out for about 20 years. So 30 maybe, Alan. So if you'd like, this would be a good time to show your website and how people could reach you and what your business model is.
Sure. So very simply, right now, I'm just trying to build community. So you can get my weekly newsletter, which is called Traders Call. Let's bring that in here. And I post videos 5 days a week on YouTube. They're about 10 minutes or so. But on Traders Call, you'll get my themes for the week, and I talk about these themes over the course of the week. And if you click on YouTube, you can watch the videos. And I, solicit and ask for all kinds of feedback. If you sign up for the newsletter, I only have one ask of you, which is that you take the information I give you, you make the trades, you can make them in a demo account, and just share that with me. So that way I know I'm not just throwing these signals over the transom and they're falling into your email box and never opened and never used or anything. So in a spirit of building community, please show me you're using the trades. Yeah. Or if you don't want the trades, tell me your trades are terrible and I don't use them, and here's why.
Yeah. Okay. Yeah, that's a reasonable request.
Yeah. And then the open trades that I have, if you just look at CADN, I put a link here so you can click this and it'll show you the trade. Beautiful. And then I do have another link where you can track all of my closed trades. And there's history there, and there's some performance numbers and some other performance info.
Yeah, I want to wrap it with one question I was going to ask you at the beginning. I believe, I used to take on relate to some type of animal spirit. You need the courage of a lion, soar like an eagle. Why sea lion? Why sea lion?
Oh, well, thanks for asking. So if you visit my website, www.sealionllc.com, it's the same as my Twitter handle and everything else. So I went to I have a daughter, young daughter, and I went to some sea lion shows with her. I live in the New York area, so down at the Brooklyn Aquarium. And I was so fascinated with these animals, I did some more reading and learned about them. And the way they eat, they hang out on the beach, they wait for the tide to get to a certain level, they jump into the water, they grab their fish, and they run out. And their number one predator is a shark. So the sharks, they like to hang out there and hope that they can catch them while they're grabbing their fish. And to me, that sounded just like trading, because all I do is I hang out on the beach, wait for that opportunity, run in, and try to get out before the sharks show up.
Beautiful animal metaphor. I love it. I knew there was something to it. You know what? I hope that you never run into the great white, Alan, and that you have a great holiday season in health and pips rain down on you and yours for the rest of the year. And really a pleasure meeting you, and gave us some great looks today. And like it or not, I will now call you my trading warrior brother.
Oh, thank you so much, Dale. And yeah, to you and your family as well. Happy holidays, happy Thanksgiving, Merry Christmas, and Happy New Year. And just thank you for the opportunity to share my charts with your audience.
Yeah, it was great, Alan. Thank you so much for your time today. Everyone, that's Alan Posner. You know how to follow him at his website, www.sealionllc.com, and on Twitter at SeaLionLLC, Alan Posner. Thank you, buddy. Have a great Thanksgiving. F.A.C.E, I'll see everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. And if you go into the water to eat after you've been laying on the beach and you haven't been hit by a shark, that's why you count your blessings. So I'll talk to you later on. Good hunting the rest of the day. You're very welcome, Bob, Todd, everyone. And that's a wrap. Adios. Good hunting. Thanks again, Alan.